Hello student, I'm Najmus Sahar. So students, in this video we are going to discuss the second chapter of your syllabus called Accounting for Partnership. That is the basic concept of partnership. As you know that the different forms of business organization which you have learnt in your first PUC itself. Okay, the sole trading concern, joint stock company, HUF, cooperative society, and among this form of business organization, partnership is also one form of business organization which you have learnt already, which you already know about the partnership. So here we are going to discuss the about accounting for partnership. How the partnership form of business they are going to maintain the books of accounts. Okay. You have learned about the preparations of final account for the sole trading concern, how they are going to maintain the books of accounts for the sole trading concern. You know about it. But if that person, if any business person, he wants to expand his business, if he wants to grow his business, or if he wants to diversify his business, then he needs more capital and even need more number of people to manage the business, to control the business. And even when the business is diversified, when the business is expanded, then the risk will also more. In order to share this, in this situation, in this type of situation, the business person is going to adopt the partnership form of business organization. Okay, to prepare the partnership account, okay, accounting for partnership will have some distinctive uniqueness will be there. Okay, it has its own peculiarities, it has its own pros and cons. Okay, so as you know that a partnership form comes into existence when two or more persons come together. As you know that a single person will cannot call him as a partner. Okay, for single individual we cannot call him as a partner. When there are two or more individuals are there, when having agreement, having consent between these two individual, if they start any business, if they start any business activity and shares the profit and losses of a business which arises, okay, which arise from the business, such form will be called as a partnership, such activity will be called as a partnership. So in order to establish a partnership form, first and foremost thing you have to remember is there should be a two or more individuals, two or more persons who have come together, for the common purpose. The common purpose is nothing but to start a business and share the profit and losses. Such will be called as a partnership form. Okay, so in partnership form, the number of factors will be affected in order to distribute the profits and losses of a profit and losses of a business. Okay, so in their agreement, in their mutual consent agreement, so in order to start a business, legal agreement is essential. Okay, they will make a agreement, they will make a contract. Okay, in that, if they did not specify regarding the distribution of profit and distribution sharing of profit and losses, in such case situation, the provisions of Indian Partnership Act of 1932 will be applicable. Okay, when it can be applicable, if in their agreement they did not mention anything regarding the distribution of profit and losses, in such case the provisions of Indian Partnership Act of 1932 will be applied. Okay, it will be applicable. If it is in their agreement, if it is mentioned, then there is a no need of following the provisions of Indian Partnership Act of 1932. Similarly, for the calculation of interest on capital, okay, how much capital they have, each partner have invested, and what are the return they are getting. If any persons draw the amount for his personal benefit, for his personal use, okay, that is what we say drawings. On that drawings, on that capital which you have drawn from the business, on that you have to pay a interest. How you are going to calculate such thing, and even how they are going to maintain the partners capital accounts. The preparations of accounting for the partnership is a very peculiar, very distinctive, very unique. Okay, not only this maintenance of capital account, interest on calculation of interest on drawings and interest on capital, and many more adjustments have to be followed in case of death of a partner, in case of admission of a new partner, in case of retirement of a partner. Specific treatment you have to follow in order to prepare the accounts, in order to maintain the books of accounts of each partner. So in this chapter we are going to discuss the different concepts or this different aspects of partnership, like distribution of profits and maintenance of capital account for the partner. Apart from that, in subsequent chapters we are going to discuss about the admission, retirement, how we are going to treat accounting treatment for the retirement of a partner. If any partner dies, how we are going to make a calculations. If you want to admit a new partner, what are the accounting treatments we have to follow. And even at the time of closing of your partnership firm, shutdowning, that is what dissolution of partnership firm, what are the accounting treatments we have to follow, that we will discuss in a later classes, later chapters. That is about your introduction. Now let us discuss about meaning and definition of partnership. Okay, as you know that partnership is a relationship between two or more persons who have agreed to carry out business with some private gain. Okay, when two or more persons join hands, okay, when two or more individual, if they come together to start a business or to set up a business and share its profit and losses, that is said as a, they said to be a partnership. Okay, so when there are two or more individuals come together to start a business for a common purpose to share the profit and losses of a business, such will be termed as a partnership. Okay, so here to be called it as a partnership firm, there should be at least two or more individual, there should be at least two individuals who have make a contract, who have make an agreement, who have given a mutual consent to start a business, that is what carried out a business with some private gain. The private gain is nothing but the common purpose, that is what earning of profit, that is what meaning of partnership. Coming to the definition given by the Partnership Act of 1932 under section 4, it defines partnership as a relationship between a person who have agreed to share a profits of a business carried on by all, any one of them acting for all. So according to the Indian Partnership Act of 1932, it says that it is a relationship. Okay, it is a relationship between the individuals, two or more persons, okay, who have agreed to share the profits of a business. Okay, this is a contract between the persons who have agreed, who have given a mutual consent to share the profits of a business, whatever the benefit we are getting from the, or we are deriving from the business, that profit should be shared among themselves according to the ratio or according to the capital contribution which is mentioned in their agreement. If the distribution of profit is not mentioned in the agreement, then you need to follow the provisions of Indian Partnership Act of 1932. When you have to follow the provisions, when the distribution, okay, when there is a no specification regarding the distribution of profit, then you have to follow the Indian Partnership Act 1932's provisions. Okay, sharing of profits and losses of a business, this business activity, the operations of a business will be carried on by all the members are entitled to carry the business, or any one of them, or anyone can maintain or can manage the business for all. This is what the definition of partnership. So person who have entered into the partnership, okay, if any individual who enter the partnership with one another, okay, with one another, that individual called as a partner. For whom we called as a partner? If any individual or if any person who entered into the partnership with another. Okay, suppose A is an individual who have entered into the agreement, partnership agreement with the B. Such a individual will be termed as a partner. Okay, and collectively called as a, okay, this collectively called as a firm. Okay, it is a firm name we are going to given. Now let us discuss the essential features of a partnership firm. Okay, features or natures of partnership. So the first and foremost is two or more person. As you are seeing in the pictures, there are different individuals who are coming together, who are joining their hands to form a business. Okay, so in order to form a business or in order to start a partnership firm, there should be at least two individuals. There must be at least two individuals coming together for a common purpose two individual must be there, and they should have a purpose. The purpose is to start a business and to earn the profit. Similarly, if any two individuals or more than two persons who have come together for the purpose of starting charitable institution or for doing charitable business, such a formation will not called as a partnership. If it is a charitable institution, if it is a charitable business, such form will not called as a partnership form. When two or more persons coming together to start a new business with the purpose of earning profit, such business will be termed as a partnership form. Okay, so the minimum number of required to start a partnership form will be 2, and the maximum will be 50 at present according to your 2014 amendment. And the maximum number, if firm is engaged in a banking activity, if your business organization is in a banking sector, service sector, then the maximum number will be 10. If any other type of business organization, then it will be a 20. Okay, that is what two or more person, that is what voluntary association of two or more person who come together, who have the common purpose to start a business and to earn the profit, such will be called as a partnership form. Next one is what? Next feature, what is they are saying? Agreement. So the partnership will come into the existence. Partnership is a result of their agreement between these two persons, agreement between two or more persons to do a business and to share the profit and losses. So when two or more person, if they are joining, if they'll make a contract, they will make a agreement. Okay, what type of agreement? To start a new business. Okay, we are coming together for the purpose of starting a business, we are doing some business, and whatever the profit, whatever the losses arise from this business, we are going to share. That is what they make a agreement. Okay, this agreement is a base for the relationship between the partners. It is a base, it is a foundation on which you are going to become a partners. Okay, it is not necessary that such agreement should be in a written form. It is not necessary that the agreement should be in a written form. An oral agreement will also be considered as a valid, but in order to avoid the disputes, in order to avoid the conflicts, it is preferable, it is advisable to go for the written agreement. Okay, so that you can file, you can show a evidence in a court of law in case of any disputes, in case of any conflicts. Okay, that is what agreement. Next one is business. Business means what here? The agreement must be carried on some business. Okay, merely so like what? Business. So if you have made an agreement to do a business, that is what? Buying and selling of goods and services, that is what? Exchange or distribution of goods and services is essential. Okay, the business should be a lawful. Okay, the business should be a lawful within the legal frame of the Indian Partnership Act, and even the government acts, whatever the laws are there, according to that the business should be, any illegal activity should not be done in your business, and even the main motive of business is to earn profit. Okay, if you have make a agreement, you have made a contract among yourself, among the partners, to start a business. Okay, and the motive of that business should be to earn a profit. See, take for example, if two or more persons comes together and they buy a land. Say for example A and B, these are the two individuals who have bought a land. Okay, a plot, they have buying, they share the co-ownership. Okay, they are the ownership of that particular land. Okay, in such situation we cannot call it as a partnership. When they A and B have owned a particular land, okay, particular plot, okay, that plot they are selling to another person, then this such situation will be termed as a business. If they have owned, they just share the co-ownership. Okay, they both are the owner of that particular property. If same property they have bought, and again that property they are selling to other person, if this exchanging is continue, then such situation we called it as a business. But the owning of property jointly will not called as a business, or not called as a partnership. So here the partnership form should be to carry out a business activity, that is what exchanging activities will be followed continuously, regularly, and they should earn the profit on that transaction, that is what a business. Next one is mutual agency. So as we have discussed in the definition itself, that the business can be carried on by all or any one of them acting for all. Mutual agency means what here? The business of partnership concern may be carried on by all the partners or any one of them acting for all. So this particular statement will says the definition what we have discussed in above. It gives the implication that first thing, every partner is entitled to participate in the conduct of a business affairs of its business affairs. And the second one, what they say, existing relationship. Okay, the existing relation of mutual agency between all the partners. Each and every partner are mutually concerned, okay, mutually dependent on each other. So every person will act as an agent to the other partner, and even at the same time he will become a principal of that particular business, that is what a mutual agency. So carried on by all means what? Every partners in a partnership form will be act as a principal. They have to bind the law provisions of Indian Partnership Act. And the second line what they are saying, it is carried on by all or any one of them acting for all. So any one of the partner can manage the business, okay, that is what we say agent principle. Agent as an agent, he is responsible, he has to carry down the activities on behalf of the other partner, that is what we say mutual agency. Next one is sharing of profit. So another important element of partnership is that the agreement between the partner must be to share the profit and losses of a business. Okay, in a definition itself we say that it is a relationship between the persons who have agreed to share the profits of a business. Okay, when in definition we says only the sharing of profits. Okay, the sharing of loss will be implied, it will be implied. Okay, the next agreement what we will make is distribution of profit and losses of a business. Okay, picture is sharing of profit. Sharing of profit is another important element of partnership that should be agreed. Okay, the agreement between the partnership should must be a sharing of profit and losses of a business. As above definition, we have seen that the partnership act describe it is a relationship between a person who have agreed to share the profits of a business. Okay, the sharing of losses is implied. Okay, whatever the benefit you will get from the business, that should be shared among the partners. Okay, thus the sharing of profit and losses is very important concept. Okay, that you have to be clearly mentioned in your agreement. If the agreement is silent about the sharing or distribution of profit and losses of a business, then the provisions of the provisions of Indian Partnership Act will be applicable, that is what sharing of profit. Next one is what? Liability of partnership firm. As you know that the liability of partners in a partnership firm will have a unlimited, okay, unlimited liability in the sense the personal property, whatever the personal property you have, whatever the personal assets you have, that you have to sold in order to meet the debts of a partnership firm in case of inefficiency in your earnings, or in case of if the assets of a business is not sufficient, if the assets of a company is not sufficient to repay your debts, then you have to sold your personal assets, you have to sold your personal property in order to make a payment, in order to repay back the debts to the creditors, that is what liability of partnership. So the liability of partnership firm will be the partners of a partnership firm held are jointly responsible to pay the debts, okay, to repay the debts jointly, and individually they held responsible for the payments of debt. This is what the liabilities of a partnership. Okay, thank you.